Everyone see that okay?
Yeah.
Okay, we'll kick off. We're aware that obviously time is precious for everybody. So as opposed to normally we would wait for a few minutes for everybody to join, we'll just get going. Given that it's in the middle of the working day, so thank you very much everybody for attending another Toast webinar. Hopefully this one you'll find as informative as the others. Very topical subject today, so. We have, I suppose, all been impacted by COVID, but I think business owners in particular, depending on their sector, have been impacted the most. So hopefully you'll find the information useful. Don't be worrying about taking notes or if you miss anything, just feel free to you can drop us a message afterwards, but the slides and a copy of the video will be posted to the social media sites as we normally do. But if you do have any questions, do feel free to put them into the box. We'll try and get through some as we can, but we're trying to keep this one kind of quite concise. Obviously, this is a very broad topic because there were a lot of government measures brought in, and to kind of compound that or make that worse, basically it is kind of jurisdiction specific as well. So there were specific rules for England, Northern Ireland and Scotland. So unfortunately, depending on the question, it'll really depend on those jurisdictions because we have attendees from all. So we will try and do them, but we're going to predominantly focus on bounce back loans in this and also the upcoming or the final grants that are available. So the SEISS grants. As I said, if you have any questions, feel free to ask them. But for now, I'll pass over to Ronan to kick us off on the bounce back loans.
Thank you very much. I feel like Chris Whitty here. Next slide, please.
Good thing.
Obviously, coronavirus has been sort of unprecedented in many respects, but certainly, whilst the pandemic itself has been unprecedented, also the government responses across the world have been unprecedented. Having succumbed to coronavirus about a month ago myself, a bit of COVID relief would have been most welcome. But I just thank God that I was double jabbed and it was as milder than it might otherwise have been. If we're looking at the government responses for the businesses, basically a lot of businesses ended up, they had to shut their doors. It was no fault of their own. And then the government sort of moved, as Michael made reference to, lots and lots of different schemes. Quite often it was the government wanting to be seen to be doing something, and without necessarily having thought it through all the way. But that said, if we look at the volume of insolvencies currently, or to date rather, the government schemes seem to be broadly been effective, not for all sectors, and there's obviously some sectors were hit worse than others, but by and large, the government moved massive resources. If you just look at there was three of the big loans, the C bills, the CL bills, and the bounce back loans. Between those three schemes alone, the government shoveled out the door 80 billion. Now, if you think 80 billion is 40 aircraft carriers for it's a significant effort. But also, if you look at the volume of businesses, the bounce back loans alone, there was 2.1 million businesses that had applied for those, and the scheme was so generous, if you like, that over 1.6 million businesses actually got the assistance that they had actually asked for. No,
this doesn't include furlough.
No. So it's just the bounce back loans. Just that it was 1.6 million businesses actually availed of that. There is a little bit of an element of COVID was, as I say, unprecedented, and it was, you know, like it was. If you think about it, it was some sort of massive weird party. But the problem is, here comes the hangover, and for many businesses, we're now looking at what do they do now. Stephen will touch on some of the other schemes, but if I'm broadly sort of talking about it, it depended very much whether or not it was a grant that you received or a loan. That determines whether or not you're actually going to pay it back or not. If it's a loan, then it's not a P&L item, it's not a profit and loss item, so therefore you're not taxed on it. But typically the grants where you're not expected to pay back, but you are going to be taxed on those. Now, but a bit of a generalization, but across the piece, that's really where it comes down to. So loans were balance sheet items, and you have to pay them back. Grants are profit and loss items, and you pay tax. They will form part of your taxable income. Now,
so the ones you don't have to repay, the downside to those is they're taxable, but the ones that you have to repay aren't taxable, which is the upside, I suppose. But you do have to repay them.
So the scheme was launched in March 2020 for the bounce back loans, and it was massively. Basically the banks were all told that, look, we're going to administer this on the government's behalf. Sorry, my camera keeps moving around. Banks are going to keep administer this on our behalf, but a lot of the normal lending requirements and the normal FCA requirements were totally relaxed because the government saw the need to, and Richie Sunak saw the need to get the money out to the businesses to effectively try and keep the wolf from the door. So next slide.
There you go.
So effectively, you're entitled to apply for a loan of up to 25% of your turnover. So effectively, if you're thinking about it, the maximum amount of it was 50,000. It's really only up to businesses of turnover of 200,000, so that's like really small and micro. But that by value in terms of the economy, it's still massively important. But also by actual numbers, this is by far and away, that affects so many people. Now the scheme was open for a full year, but the early schemes, the early loans, actually, what happened is that you didn't have to pay anything for the first 12 months. Effectively, the government paid the interest on it for the first 12 months, and then it kicks in for the business to have to repay it. So, as I said again, emphasizing it's a loan, not a grant, has to be repaid. And it had to be used for the business, effectively, for the purposes the purposes of the business. The scheme had, as I said, it had ran for a year, but already businesses are now being contacted with a view to, look, you've had a year that you didn't have to pay. Now the time is that you pay. So government paid, as I said, paid the first 12 months interest. Now, interestingly, actually, the interest rate was pretty good in terms of it's fixed at 2.5% for 6 years. I have come across some businesses that actually just used it as an opportunity to flip out their finance, to refinance some other facilities. And I'm saying that was maybe savvy, but they still have to repay it.
It is actually fixed for the 6-year period.
The interest rate it's fixed. Now, and you can repay it at any stage if you're as a business that you're in a position to. I had encountered some businesses where they, despite the fact, it kind of seems that quite strange. It seems almost beyond belief that bounce back loan, that they didn't quite, they kind of seemed quite shocked that, when they got the notification from their bank in June or July that they had to repay this, that they're kind of, well, hang on a sec, I didn't know that, and I think in fairness to some people that there was obviously the early sort of months of the pandemic, most people were focusing on how to save their business. They weren't necessarily reading the small print of what was being of the life rafts that were being offered to them, and so that they thought they were getting a grant, but in actual fact they got a loan. Now the other side of that is those people who got a grant maybe didn't recognize that they're going to be a foreign part of their taxable income. So next slide, Michael, please. We have actually got a couple of questions from people, and I kind of wanted to try and touch on those just now. If the business now we're can see light at the end of the tunnel of the pandemic, thankfully, high rates of vaccination, etc. But there's still some sectors which have been very adversely impacted, and so it's not beyond the realms of possibility that those businesses are struggling with their the fact that they have to pay this loan.
Yeah.
The government have come up with a scheme called Pay As You Grow, which is actually pretty good in terms of the original term of the 6 years. You can extend it out to 10 years. Right, which obviously would have the effect of reducing the repayments. Now, you're still going to pay interest on it, but it's at that fixed rate of 2.5%. So, although for a business, if you're struggling, one of those there's three major options really, but that's one that you could avail of, and it's just extending out the duration.
To just give you a bit of breathing space for a period of time if you're struggling cash flow wise. Now, I assume that you can go back because there's no early repayment charges. If you're back up, you can kind of make up what you can extend it over longer term.
Exactly. Now, two of the other ones, you can actually apply for a 6 months payment break, so payment holiday. If you can't, say for instance, you were working in, I don't know, for the sake of argument, maybe had a nightclub still not reopened, questions around whether or not you're going to need vaccine passports and so forth, but you can't afford it. You're looking at your revenues going forward, and you're thinking, I'm not going to be able to repay any of this. You can, for one period within the term, be it 6 years or 10 years, you can have a payment break, so a total payment holiday. An alternative might be that you say, well, I can repay, I've got something, but these cash flows still aren't great. Maybe your business is seasonal, in which case you can avail of 6 month period of going interest only. So you're just paying paying the interest. You're not paying down any of the capital. Now you can do that, although the payment holiday is one of 6 months. Mm-hmm. The interest only you can do 3 times. Okay, so 3 periods of 6 months. Mm-hmm. And you can do a combination. So I mean, say if say your business, you'd borrowed 50,000, it's quite a substantial amount, and you're then looking, right, you stretch it out over the 10 years, you take a payment break at this stage, then maybe things are tight, at a stage next year when it's still not totally back to normal, so that's the concept of this, that pay as you grow, and that the government, I thought, felt that they've tried to do it as best they can.
I suppose if they engage, if you engage with your accountant, now I know at Toast we can actually do this for people as kind of assess that the cash flow for the next 12 months. We can look at it and kind of say, okay, there's a period coming up here. We might need to avail of some of these these flexibilities that are available on the bounce back loans. And so we could actually just assist and kind of say, listen, if you do an interest only period here, or a payment break, or you extend that out, or as Ronan said, a combination of those, you can actually then see that the business will be fine thereafter. So it might just be quite a simple adjustment to them. We'll just give you that bit of breathing space, and your accountant can do that. And obviously it's something that we can do quite easily because of the platforms that we use and things like that. We can just adjust it going forward to see how the business is going to perform for the next 12 months and just project that out.
Yeah.
Sorry.
Okay. No, it's good point, and also something to bear in mind is as I come on to the second question here about people who are concerned that it's going to impact their ability to apply for credit in the future. Now, the loans were designed to not impact upon your credit rating. So your company's credit rating or your business credit rating should not have been impacted by a bounce back loan. However, one thing to bear in mind is that lenders say you're going to refinance something, or you're looking for expansion in a couple of years' time, and you still have that loan, in place. They will want to look at your repayment. Well, one, the repayment history, but two, they'll also look at the level of payments that you have been. They'll factor that into any loan affordability for fresh finance. That's what I'm trying to say.
So a commitment for the business. So
yeah, the commitment to the loan does exist. Coming on to then how to account for it, I touched on it briefly, and it's maybe I kind of sort of stole my own thunder, but it really comes down to, because it's a loan, it is it's a balance sheet item, so it goes on the balance sheet as a loan, and therefore, and then the repayments come through the P&L. It's not, it doesn't go straight into your your turnover or anything the way some of the other supports might. And this is actually quite a topical issue, is that, and it comes back to that sort of almost like the hangover after the party. Sort of people are asking, they borrowed, taking a bounce back loan, and they're saying, what was it supposed to be used for? What was it supposed to be spent on? And I know that in the insolvency world, it's quite a topical issue that they are saying about the abuse of bounce back loans is a sort of a red flag topic at the minute. The loans were supposed to be used for the furtherance of the business. They weren't supposed to be used to put an extension on the side of your house, because which we did have one experience of. People might be saying, well, I was putting it on because I needed to work from home. I don't think the public purse sees it that way. So it was supposed to be for the furtherance of the business. So hopefully that. Is there another slide for me, Michael, or am I coming to the end here?
No, I think you're.
I get to hand over to Stephen. Sorry, Stephen. I hope I haven't.
What have we left?
10 minutes, go.
Oh, thanks, Ronan. Ronan kind of touched on the ones more focused on businesses. Now, the self-employed income support scheme, kind of in the name, is focused on those self-employed individuals that were impacted during coronavirus. Now, we've been through 4 rounds of these applications to date, and the reason why we think it's important to talk about now is because there's another round that you are able to apply for. Now, the deadline for it, as you can see highlighted there, is the 30th of September. So there's a week left to make the application for the 5th grant. But the most important things with these grants, because it's we're at the stage now where individual tax returns are about to be filed, coming up to the January deadline. We get a lot of questions from people as to how it's actually treated on their tax return. Now, the most important thing is that they are grants, but they are subject to income tax and national insurance contributions. They're effectively treated as trading income. Now it's outlined separately on the actual tax return itself, which I'll touch on in a second and give you an example as to where it actually goes. But the most important thing is it is taxable, and depending on which loan you actually received and the periods in which they received depends on which tax return they're actually going to go on, which we'll touch on now in the next slide.
Which grant you mean? Which grant? So this one's a grant.
Actually, grants. Sorry.
So this is the one where the benefit is that you don't have to repay it.
Yeah, but
it's taxable
income. Yeah.
Okay. Next slide.
Next slide. Yep.
Okay.
Now this is just a breakdown of the actual periods in which each grant had covered. Now, so you can see the first one obviously came out at the start of the pandemic, really, and it covered a certain period. But the important thing is to understand which grants are actually going to be going into your tax return. Now, again, the final grant covers the period, the fifth grant from from May, I think, to September. But the important thing will be the actual tax return as to where it actually goes. So we just click on to the next slide, Michael, and we'll see exactly where it goes. Now, although it's self-employed individuals, now it also aimed at partners in a partnership. But in terms of the 2020-2021 tax return, which is due to be filed by the 31st of January coming, so 31st of January 2022, the first three grants is the grants that will be included in that tax return. So if you received any of those grants in the first three periods, then those are the ones that are going to go on your tax return as a self-employed individual. If you're a partner, there's two potential scenarios. One of them would be if you're the individual partner and you received that income directly into your own individual account, then it's treated similarly to a self-employed individual in that it's on your tax return. If it's coming into the actual partnership income and it's actually been going into the partnership account, then it's dealt with a bit differently in that it's separated among the partners after you factor in the partnership's income as well. And then the final two grants in grant 4 and 5, they're going to be going on next year's tax return. But the small example there, just for those who are maybe tackling the tax returns themselves, which you see quite a bit. This is just a bit of example as to where the actual income should be stated on that tax return. So, I mean, if you had your original profits from the trade, then it's in box 64. Let's say it's 40,000, but you'll enter the grant or any SEISS grants that you got in a separate box. So it's box 70.1 for those grants. It just gives the HMRC a detailed breakdown as to what the income is made up of. So it's not kind of put in there fully as trading income. And then obviously they are taxable at that stage. It's just to separate them out, really.
Yeah. Okay. Good. Next one.
Yep. Okay, so the final one, like I said, it is due to close by the 30th of September. So those that are eligible, and I don't know the exact figure, but I think there was around 600,000 maybe that was eligible for the 4th and 5th grant. So if you are one of those that are maybe eligible but haven't submitted the application, then you have a week to do it. But the rules are a bit different in that the main change and the biggest change is that the amount that you'll receive is going to depend on whether or not your turnover has reduced by more or less than 30%. And then those figures at the bottom is that the 5th grant, you'll get 80% of 3 months of your average trading profits, which that's capped at 7,500 for those taxpayers whose turnover has dropped by 30% or more. Now, if it's dropped below 30%, then you still will get some form of a grant, but it will be capped at 2,850.
Okay.
And then just final slide, I think, from me, it's just some of the conditions attached or to make you eligible for that 5th grant. So the most important ones is that you've had to have submitted a 2019-20 self-assessment by that date of the 2nd of March 2021. You have to have traded in the 2 tax years 2019 to 20 and 20 to 21. But you have to be still trading, but your business is still impacted in a way. Either demand's down or you're kind of struggling to continue at the level that you were. But the main intention is that you want to continue to trade, and it's one of the main things that they look for is that you're still intending to trade in order to be eligible for these grants. And you have to reasonably believe that there's a significant reduction in your profits due to the pandemic. So they might ask for, how has it been impacted? You might have to give them a brief explanation as to the reasons why. Now, the last few ones, there's a couple of tests that you have to apply in relation to your turnover. Now, it can be a bit technical, but look, we would be happy to look at it in terms of the eligibility if there was anyone that maybe needed some help to see if they were eligible. But the two main points is that your trading profits must be no more than 50,000 and more than half of their total income for either the tax year of 2019-20 or the average of the tax years for 16-17, 17-18, 18-19, and 19-20.
Good. Okay. So I think that's everything. We've actually managed to bring that in below time, which is great. But I think from just touching on
that was down to Stephen rather than me.
But just touching on what kind of Ronan said about in relation to the bounce back loans, there are there are ways to kind of ease that if you're concerned about your business. And I suppose from our side, what we would suggest is that you engage with your accountant. And if it's something that you don't currently have an accountant or whatever, you can book a consultation with us and we can go through these particular things with you. Likewise, there were other reliefs that were granted by the government and things like that. So you might have questions around those and specific to your business. Again, if you want to book a consultation to see how that would impact you or how it's going to impact you going forward, we're available to do that. But if you're worried about it, it's better to address it now. Deal with it with your accountant. You may end up kind of discussing it with the bank and putting a bit of a restructure in place to the loan. And it can mean that that you're not having to worry about that one aspect of it. It can be extremely worrying, especially when it's threatening your business. So one thing we would suggest is do discuss it with your accountant, that we can help to alleviate some of those concerns. And then likewise, it might be that you discuss it with the lender and get those restructures put in place, and the business will be fine after that.
I think, sorry, Michael, just on that, it really comes back to some of the boring basics. I'm afraid it's cash flows and projections, and yes, there's some elements that you finger in the air when you're doing your projections, but you know your business. You can work with your accountant, draw up your projections for the next 6, 9, 12 months. And then look at what the cash flows are, and then you monitor against that. And okay, if you're not performing as well as you might, then you might think of availing of some of the pay as you grow reliefs. I did see a question there that came in about the 2.5%. The 2.5% is fixed, and it is fixed for the duration, be it the original 6 years, or if you've extended it out to the 10. So hopefully that addresses that. But like I say, it comes back down to some of the boring fundamentals.
It always does, but I mean they're useful, and that's why they're there. So you can always talk to your accountant about that, and they can assist you with cash flows and stuff like that. But again, if anybody needs to book a consultation, you can do that on any of our social media sites, and obviously if you want to follow us on the social media sites, you could do that as well. But I think that's everything for today. So I'll just thank Stephen and Ronan for being our experts on bounce back loans and grants. And I'll just wish everybody a good day, and thank you.
Okay.